Hello traders, this is Dimitrios Karalampidis from Snail Trading, and in this video I'm gonna present you my views on the United States dollar against the Swiss franc. We see here the weekly chart, prices rebounded after hitting the 55-week SMA, and that was last week. The previous week, excuse me, and last week they continued to the upside when they were rejected by the 21-week SMA. We don't have much more to say here. This level, of course, remains the most strong resistance level for the pair for now, and we need a break below this 55-week SMA to confirm our preferred bearish long-term scenario. The break below this trend line, however, puts pressure on the momentum, which I consider bearish already for the long term. Looking at the daily chart, we see how the previous week this large decline that moved the pair to new lows moved the RSI at the threshold 30 level, from where it bounced very sharply together with the prices here. But again, last Thursday, we see this candle here is last Thursday, prices hit the 55-day SMA and they reversed lower, creating a doji. The doji pattern is a pattern of which it is neither bullish nor bearish, but it reflects indecision, and how it will play out depends on the candle that will follow. And the candle that followed made another attempt to move above the SMA, but it didn't manage to, and reversed and closed closed lower with a bearish candle that closed below the wick of the doji, which suggests that we have a bearish reversal here on the making. Looking at the 4-hour chart here, we see how the momentum on the 4-hour chart became overbought, and prices reversed lower from here, breaking below the 21 period SMA, which has been broken here. And here we had a break off for the 55 period SMA, and prices are heading towards this SMA at least. The problem here is that this up move here is very sharp, and it looks like it is in 5 waves: 1, 2, 3, 4, and 5. However, there are some alternatives, because the price action in here is very choppy, and therefore it may be counted that wave 5 has ended here, and then we have A, B, and C that finished here, or even we can have A, B, and C for a truncation, because here this high is lower than this by I think less than a pip. I consider it so far as part of a correction, like A, B, C to the downside from here, that is incomplete, but it could be A, B, C, and wave 2 already finished here, and that would mean that prices will continue in a much more accelerated and impulsive way to the downside from here. We need more price data to decide whether this was the end of wave 2 or only wave A of 2. That pretty much sums up everything about my account on the Swiss franc. Thank you very much for watching, and see you next week.